Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. Ensure to subscribe and turn on the notifications so that you know when we go live or upload a valuable talk on money, business, and investing that can literally change our finances forever. It can take us from the left side of the cash flow circle to the right side of the cash flow circle where wealth is created, right? We understood that there are 4 players in the game of money: employee, self-employed, business owner, and inside investor. Here at Master Investor, we're developing business owners and inside investor. That's the person we are attempting to be every single day, which means we have to focus on acquiring assets that produce cash flow. We need to build networks. It's important that we approach as strangers, and we need to follow our intuition as well. When it comes to money, we need to understand the basics of business in order to master investing, because money is investing. The more we talk about business, the more we know about investing, okay? So we need to invest in our financial education. We need to focus on expanding our assets column with real assets that we control with our companies. Rule number 1 in our community at Master Investors is that we work to build passive income and make money work hard through sound investing. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today's topic is how to invest in stocks from home. Investing money into paper assets for all to find out if stocks are the best way for us to get out of the rat race and build true wealth. Consider these benefits and drawbacks. However, we need to understand that we are going to invest in the 5 different asset classes that exist. Stocks is in the paper assets class. And we're going to not only focus on that, but we're going to focus on business, real estate, crypto, commodities, and then we're talking about paper assets now. Those are the 5 asset classes that exist, and we need to learn about them, okay? Because the better knowledge we have in regards to those asset classes, the better we're going to succeed in all of our investments. The higher return we're going to get, we're going to be able also to spot the best investments that exist, because we have the eye of the entrepreneur. We understand how to read financial statements, and we're not just an average investor. We're an extraordinary investor who invests for passive income, and we are an inside investor, which is a true capitalist. Okay, Master Investor is a capitalist. Today's summary: recognize the fundamentals of investing, learn the distinction between speculating and investing in stocks so that we make wise financial decisions rather than taking unnecessary risk. Why investing from home works. Investing in stocks from home is now simpler than ever thanks to platforms like E-Trade and Robinhood, which provide flexibility and a range of options to expand our portfolio. Select carefully, learn how to identify stocks with a solid fundamentals to focus on in order to achieve long-term investment success by examining market trends, managing caliber, and financial health. We may be thinking, if they can do it, why can't I? If we want to provide a stable future for ourselves and the people around us, or if we are motivated by the financial success of investors like Warren Buffett and many other financial investors alike, then we need to focus on building our assets column. Betting or investing or gambling, right? When an investor doesn't have financial education and he attempts to invest, he's gambling, right? He's betting. It's not secure, it's not calculated. The risk goes higher because the investor lacks financial education. That investor is passive. Is a passive investor most of the times when they give their money away to somebody else to invest it for them. And usually they give it to a brokerage company, they'll give it to a firm that will invest their money for them. And what happens with that is that the individual doesn't learn anything. All he does is like deposit money into their savings account. So nothing really changed from savings to investing in fake assets, right? You're still doing the same thing, and now it's like directly pulled out of the person's check if they opt in for the 401k, which is a fake asset. It doesn't put money into the investor's pockets, and then it's not an asset. It's withdrawing money every single month. Until that puts money into the investor's pocket, then we can talk about being an asset. But right now, if it doesn't put money into our pocket, then it's not an asset. So let's make sure we label what is an asset an asset. Let's not label things that are liabilities an asset. Majority of people fall into that category of labeling assets liabilities and vice versa. We need to know the definitions between assets and liabilities. An asset puts money into our pocket whenever we're not working. An asset is a system of systems doing the selling and selling for us because it's a business that is solving a problem in the world. And a liability is an expense that comes out of our pocket, right? It doesn't make us any money. We have the experience, we have the luxury item that we acquire, and it carries that expense. So it just withdraws money out of our pocket. Doesn't mean that it's bad. We don't need to shrink or cut expenses or save money to build true wealth. In fact, we encourage everyone to always live above our means, to expand our assets column, to build networks, and to always do this one simple principle that I want to share right now with all of us here in our community, which is when we leave people's vicinity, we need to give them the sense and the idea that we are extraordinary, okay? That when we leave their vicinity, they're thinking that was better than they expected, right? And there are 3 types of Uber driver, as I always say. Number 1, the Uber drivers that find us. The second type of Uber driver is the one that doesn't find us. And the third type of driver is the one that when they leave, we always say that was better than I expected. So we want to be that type of person in anything that we do. When it comes to money, we want to be extraordinary. We want to be able to speak the lingo of money. We want to be able to understand how to analyze, how to have a conversation about the financials of an investment that we're analyzing, so that we can communicate with our team members. And those people might include an attorney, it could include professionals in other sectors, but we need to speak the language of money, which requires commitment to financial education. That's exactly what we're doing here at Master Investor. So I'm grateful to be here today sharing this amazing knowledge that is literally not found anywhere. We cannot get this in just any outlet out there because not everyone is teaching the real principles of true wealth. A lot of people are asking people to give them money, and they end up making money with their commission by having their money stuck in the stock market. The investor has no power, no leverage. So here at Master Investor, we do things very differently. We're going to focus on building our financial IQ, which requires, like I said, financial education daily, and we're going to deliver daily content to our community so that we can all improve our financial IQ so that we can solve financial problems. Okay, so all about understanding how to create wealth with the new rules of money. Make sure you click the links in the description. We have 3 ebooks right now: the 10 new rules of money, how to build cash flow with the internet, turn passive income on, and how to invest in crypto to build wealth. Understanding the difference between investing and speculating is a crucial first step. Put simply, it is understanding the difference between risking our money on ventures we shouldn't take and making well-informed financial selections. Purchasing assets with the hope that they will eventually yield a financial return is the standard definition of investing. We get paid by our assets that we control with our companies. We pay for liabilities from the assets, right? That the revenue of those assets will pay for those liabilities. That's why I say we don't need to shrink in order to build wealth. In fact, we need to expand our expenses column. We need to expand our liability column. We need to expand specifically our assets column, right? We have to, right? Because if we just focus on the liability column, then we're going to find ourselves in financial disaster. That's where majority of people live, in financial disaster, because they have too many liabilities and they have no assets coming in, or they have no assets that bring in any positive cash flow into their pocket. They have no assets in the asset column, okay? And all they have is a job maybe, and then that's all the type of, so they focus on building more of the liability column. They forget about their assets column because they lack financial education, and so they're in the rat race and they struggle financially. So let's get out of the rat race by understanding the principles of money, by grasping the new rules of money, by playing with those rules, and by having the right context when it comes to money. Two types of mindset when it comes to money: the wealthy mindset and the poor mindset. Which one is the type of mindset that we want to be equipped with is a decision that is personal, and we should take this very seriously, because we're going to be playing with money for the rest of our lives. So if we're going to be playing a game, might as well master that game. Don't be a victim of the game. Let's master money. Let's make money our slave, and let's do exactly what the ultra wealthy is doing, which is printing money legally with debt, because money is created with debt. In August 15, 1971, that's when President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, paper money, fake money, and just an idea backed up by confidence. Is a currency. So money must move from asset to asset in order to maintain its value. If it stops, it goes back to its intrinsic value, which is zero. It has lost over 90% of its value since 1971. It's not going to take another decade to lose, or maybe even, I don't know how much it's going to take, but the only way money can maintain its value is by going from asset to asset. It must move, and we need to know how to do that by having financial education and taking action. Purchasing assets with the hope that they will eventually give us the passive income, and we need to understand how fast we're going to get that passive income, okay? We need to have that in writing before we even start the investment. I mean, we need to measure our return on investment with facts, not with opinions. So we need to read the financial statement. If we're looking at a business, if we're looking at a stock, we need to look at the company, we need to look at the graph, we need to look at everything that comes down to that investment. We need to read the financial statements of that investment, okay? And if we're building one, then we need to compare with the competitors to see how are they doing today, right? All of that information is pretty much online that we can have access, and we can come to conclusions that are based on facts and not opinions. When it comes to investing, always keep in mind, I'm going to go with facts. We're going to focus on having return on investments based on facts, meaning this is how much it's making today. When we take over, it's going to be making that much, so this is how much we're going to get. After the new expense that has been added, this is the new positive cash flow of the business instead of this one that was before, right? And then this is what we're going to do to improve the cash flow, and then we can implement the strategies to improve that bottom line. But we need to be speaking with facts when it comes to investing. That way we are not speculating, and we don't get in a situation where we're hoping and praying that the market or something is going to happen, which will never happen, so that we can make money. And a lot of people end up losing their entire capital like that because they literally lack financial education. That's the main problem. But making more money isn't the only goal. Increasing our purchasing power is the true aim, because annual price increase cause the US dollar's worth to decline. This is accurate regardless of how high, moderate, or low inflation is. We can see when Biden took office in 2020 on the graph that we're looking at on the screen. If you're watching this on YouTube or any other live stream platform, then make sure that you go to our website, subscribe to our newsletter so that you have this article via email. Also, for those who are listening to our podcast right now, if you want to see the graphs, make sure you go to our website or go to our YouTube channel so that you can see what we're sharing right now. But the graph gives us an idea of how everything has evolved year over year inflation. Okay. Therefore, merely keeping cash in the bank or beneath our mattress won't improve our financial situation. Even when inflation reduces the value of money and having a higher paying job, like many people think, that doesn't solve financial problems. However, investments that increase our buying power do. We are all aware of the low returns on certificates of deposits, CDs, money market accounts, and savings accounts. We call those fake assets in here in our community at Master Investment, because they don't put any money in our pocket. They're not making us wealthy, right? So we have no control over them. We lose control, and we don't learn anything by investing in those fake assets. Those assets are created, which are fake assets. Those fake assets should be called liabilities. Those liabilities are created for the financial uneducated. It truly is offensive. While we make a few pennies a year, the banks use the money we deposit in our account to generate revenue, and they make so much more. And we can be the bank. That's what we're encouraging everyone to do, to not give their money away to anybody to invest it for us. We're going to take that and we're going to do that. And we're going to have relations with the banks, and we're going to raise capital. Our fourth ebook is called How to Raise Capital to Build Wealth. Because the job number one of a wealth entrepreneur is to raise capital. Okay, so that's going to be released in the next month. But stay tuned and make sure you click the links in the description, because we have the 3 ebooks, the courses, and we have services that can help us understand how to build our business and investment portfolio with success. An investment portfolio that has positive cash flow coming in daily. Think about this instance. Assume we get even worse when these investments get older, our purchasing power won't have increased in line with inflation. That's right, because those are fake assets. So it doesn't really increase our purchasing power, and that's why I want to focus on this stock, that we need to understand how to get that purchasing power to skyrocket, and we use debt for that. We're going to use credit cards, we're going to use personal loans to invest, we're going to have relationships with community banks so that they can lend us the money to buy a property that makes sense for them as well in the portfolio, a commercial real estate property that creates cash flow. Think about this example. Assume we get a $1,500 tax return. We may put it into a certificate of deposit CD to generate interest, or we could use it to buy something we have always wanted, like a new laptop. Often to save, we put the $1,500 into a CD. Given the current rates in June 2024, let's assume we choose a CD with an annual percentage yield, APY, of around 5%, which is a competitive rate right now. By the end of the year, we will earn approximately $75 in interest, for a total of $1,575. Meanwhile, if the price of the laptop increases by 10% due to inflation, it will cost $1,650 by the end of the year. Although we have more cash, our purchasing power has effectively decreased. The lesson here is that inflation can reduce the value of our money over time. By focusing on investments that outpace inflation, we can protect our financial future and improve our investment outcomes. The drawbacks of viewing Wall Street as a gaming casino. The appeal of making quick money can be even stronger in the post-pandemic environment. Still, among the easiest ways to lose our hard-earned money is to pursue speculative investments in the hopes of making quick rewards. Speculation is placing large risky wagers based mostly on intuition. Even while we might sporadically see short-term gains, there is a considerable chance of suffering larger losses. Think of the 2008 real estate catastrophe or the dot-com bubble of the late 1990s. Assuming that prices would climb indefinitely, many speculators squander their wealth by placing bets on expensive tech stocks and real estate. This bubble burst, leaving them with enormous losses. When we get to the post-2020 era, we observe comparable trends. Many novice investors flocked to sites like Robinhood during the COVID-19 outbreak, following the stocks like GameStop and AMC, which rose sharply in value. The stocks were frequently driven by social media excitement rather than prudent financial research. Similar to gamblers, these investors experienced some early successes, but as the values of these stocks inevitably fell, many of them suffered large losses. And further illustration would be the fluctuations in Bitcoin prices throughout the pandemic. As the value of Bitcoin and other cryptocurrencies reached previously unheard of heights, speculative investment poured in. However, individuals who invested at the top in the hopes of steady growth suffer significant losses due to the market's extraordinary volatility. These speculators were not acting out of genuine investing, which is what they were unable to realize. They were taking big chances that could result in disastrous long-term losses in addition to short-term profits. Many people are cautious about the stock market out of fear of making the same mistakes again. It is imperative that we recognize the distinction between investing and speculation if we are to meet our financial objectives. Investing is a methodical approach to gradually increase our money, whereas speculating is more akin to gambling. For more dependable and continuous financial success, steer clear of speculation and concentrate on wise investments. As we can see, the cash flow pattern of the poor class is displayed on the screen. We have the financial statement simplified. We have the income column, the expenses column, the assets column, liabilities column. The poor class usually have no liabilities, all they have expenses, and they have income coming in from a job. They have no assets. Okay, so the financial statement looks pretty empty in the balance sheet, except they even have no liabilities because they have no credit usually, or they have no high income. Why it makes sense to invest in stocks from home? The ease of use and accessibility of home investment are more important than ever in the post-pandemic era. And remember, employee and a self-employed pays the highest in taxes. So people on the left side of the cash flow circle, so the poor class has a poor mindset. The middle class has a poor mindset. The wealthy class, of course, has a wealthy mindset. Now, the poor class pays the highest in taxes because they work for earned income. And the ones that pays the less in taxes are those on the right side of the cash flow circle, those in business owner and inside investor, right? So we build passive income, we can minimize taxes all the way to zero because passive income is taxed at the lowest bracket. When we mix it with good debt, then we can literally have a tax-free investment portfolio that is growing and keeping us with excess of cash flow. Two types of problem when it comes to money: not enough money and too much money. We want to have the second type of problem, too much money. We want to experience excess of cash flow from assets that we control with our companies. When comparing different investment possibilities, it is evident that the stock market has performed better in the long run than other asset types, such as real estate. The stock market has historically produced strong returns. For example, since 1988, the S&P 500 has returned an average of almost 11% per year compared to other asset types, such as real estate, which usually yields lesser returns. This performs better. Comparatively, over a same time frame, the Case-Shiller Home Price Index displays an average yearly return of roughly 3.71%. Investing in stocks from home is an appealing option for the following reasons. Affordability: we can begin trading in the stock market with comparability and comparatively little capital. In contrast to real estate or commodities, which frequently demand large initial investments, we can start investing as little as $1,000 in stocks or even less than that. Liquidity: stock transactions are simple and quick to complete. Shares can be bought or sold in a matter of seconds, and transactions usually settle in a few business days. For example, we will typically have the money by Thursday if we sell shares on Monday. Diverse investment opportunities: there are many different kinds of investments available in the stock market. We can invest in different types of stocks that are available to the investors. I suggest that you focus on building a cash flow with stocks, and we explain inside of our digital course and ebook how to build cash flow with the internet, turn passive income on. In one of those chapters within that volume, you'll find a strategy of how to build cash flow with stocks. Okay, so it's a great chapter. It's simple, and we can duplicate exactly. It has actionable steps to duplicate so that we can have the same success and even better success, whatever success we want to have. It's up to us. We can also trade on the foreign exchange market and access a range of derivatives, including options and futures. Online brokerage systems have become increasingly popular as a result of the pandemic, making it simpler than ever to handle investments from home. The process has been made simpler by platforms like Fidelity, E-Trade, and Robinhood, which provide comprehensive educational resources and user-friendly interfaces for both rookie and seasoned investors. Furthermore, the post-pandemic shift in favor of digital financial services is in perfect harmony with the growing popularity of remote employment and the digital nomad lifestyle. We can have freedom and control over our financial destiny by managing our investments remotely. Home stock market investing offers a special benefits and chances. We can create a robust and resilient investment portfolio that is suited to our financial objectives by making use of the many tools and choices that are readily available online. Right now, because literally we all have access to the internet. So maybe you don't have access to a lot of capital, you can start investing in stocks. If you can get started in real estate, start in stocks, right? Start investing into one of the asset classes. We need to focus on building a passive income. We can create a return on investment very quickly. Nowadays with the technology, we can see the money back into us in a matter of seconds. So take advantage of everything that we have today. As we can see, we have the diagram of the poor mindset. 97% of the population, the employee and the self-employed, have earned income from a job. Therefore, they pay taxes first and maybe buy assets after, if any. Poor mindset people attempt to buy assets with after-tax dollars. Many times it is not enough to afford any assets after everything is paid, including their expenses from liabilities. Therefore, their assets column is empty. They lack financial education and they do not actively invest themselves. So their expenses column looks like number 1, pay taxes, number 2, acquire liabilities, number 3, acquire assets. The last thing they have in mind is investing and doing business. They want to work for their money. Okay? And if the person loves their job, that's fine. We still recommend everyone to learn how to invest and master money through sound investing. Selecting the best stocks for trading. While stock investing may appear complicated, there are a few fundamental guidelines that can help us choose the right stocks to purchase. This guide will assist us in understanding the kinds of stocks we should have in our investment portfolio. Determine industry trends. Seek out businesses that are capitalizing on significant industry trends, usually changes in consumer behavior, developments, or technology advancements are the driven forces behind these movements. Businesses engaged in e-commerce, artificial intelligence, and renewable energy, for instance, have demonstrated tremendous development potential. We may determine which industries are likely to do well in the future by having an understanding of these tendencies. Analyze management quality, judge the leadership of the organization. A company's performance is mostly dependent on its management group and its CEO. Examine their background, experience, and past success in handling difficulties. Proactive, creative, and open with shareholders are characteristics of great executives. Strong leadership often helps a company better navigate changing market conditions and take advantage of new opportunities. Verify the company's financial health. Look over the financial records to make sure The balance sheet is sound. Growth and sales, profit margins, debt levels, and cash flow are important metrics. Strong financial positions put businesses in a better position to weather economic downturns and make growth-oriented investments. Seek value. Determine which stocks the market has undervalued. The pricing of these equities, which are frequently the result of investor ignorance or market overreactions, do not correspond to their actual value. We can use tools such as the price to earning PE ratio to assess if a stock is reasonable priced in relation to its earnings. Purchasing inexpensive stocks might yield significant profits if and when the market corrects. We can see the wealthy mindset now, the diagram that displays that 3% of the population are businesses buy other assets first, and then we pay taxes after, if any. Wealthy people buy or acquire assets first before tax dollars and pay zero in taxes in many occasions legally. Then we acquire liabilities by having the assets pay for the expenses of the liabilities. We can obtain everything for free, all done legally using the tax code and corporate law into our advantage. As we can see, the expenses column, number 1, we have acquire assets. Number 2, pay taxes, if any. Number 3, acquire liabilities. And remember, it's all about expending. That's why I said earlier on our talk, it's not about cutting expenses. It's about living above our means. It's not about saving money. So we want to expand our income column by acquiring more assets that produce passive income and capital gains income. And we can increase our liabilities column because we can acquire any asset that we want to pay for that liabilities expense. And we want to create more expenses. We want to master the ability to spend wisely and to create as many expenses as we want because we have assets that will cover for all of those expenses through passive income. Apple case study. Let's use Apple in 2024 as an example of a real-world application of these ideas. Given it is enormous market share and high price, many investors will be skeptical of Apple's ability to grow. But a closer look reveals why is still a wise investment. Number 1, market trends. Apple remains at the forefront of a number of important market trends. The company is concentrating on extending its ecosystem, which includes AirPods, Apple Watch, and the services sector, which includes Apple TV Plus and Apple Music. This is in line with the growing trend of linked gadgets and subscription-based business models. Furthermore, Apple is well positioned in developing tech industries thanks to its innovations in augmented reality, AR, and artificial intelligence, AI. Number 2, management caliber. Apple has kept it in its operational superiority and creative edge under CEO Tim Cook. Cook's leadership has made savvy acquisitions, efficient cost control, and constantly high quality products possible. Strong and progressive leadership is further demonstrated by the company's engagement in sustainability and green energy programs, as well as its capacity to handle supply chains difficulties. Number 3, Apple's financial health is impressive as evidenced by its strong balance sheet, large cash reserve, and reasonable debt levels. Apple's $394.33 billion in revenue and $94.68 billion in net income for the fiscal year 2023 highlight the company's stability and profitability. Strong cash flow generated by the business allows for ongoing R&D, dividend payments, and share buybacks. Number 4, value. Given its potential for future growth, Apple's stock may still be cheap despite its large market capitalization. Despite being higher than some of its competitors, Apple's price to earning PE ratio indicates the market's faith in the company's capacity to continue innovating and turning a profit. Long-term growth oriented investors can benefit from Apple's potential to keep generating impressive financial performance. We can choose stocks with greater knowledge if we consider factors like value, market trends, management caliber, and financial stability. These guidelines position us for long-term investing success by assisting us in identifying businesses with great growth potential and sound foundations. Especially in the wake of a pandemic, stock market investing demands meticulous research and strategic planning. We may negotiate the intricacies and create a robust investing portfolio by adhering to these rules. Do we actually require a stockbroker? These days of needing a stockbroker to handle our finances are long gone. In 2024, with the advancement of technology, trading stocks from home is now simpler than ever. We don't need a broker to navigate the stock market if we have the appropriate financial information and resources. There's a reason stockbrokers are called brokers. After all, if they were that good at predicting winners, they would be wealthy. Selecting the best internet brokerage. It is important to choose an online brokerage. Finding the broker that best suits the person's trading style and objectives is more important than trying to discover the finest penny stockbroker. Here are important things to think about. Trading costs. Commission-free trading is a service provided by many brokers, but watch out for additional costs, particularly when trading OTC equities. Trading tools. Verify if the platform offers strong tools and resources such as stock screeners, advanced charting, and instructional materials. Mobile trading. To trade while on the go and stay up to date with the market, we need a reliable mobile app. Customer service. Having dependable customer service is essential. Verify that we can get assistance when needed by testing the broker's support alternatives. Stock analysis. Having access to in-depth market data and stock analysis can assist us in making wise choices. Leading online brokers. Numerous online brokers serve a range of trading requirements. Number one, Robinhood, well known for having an intuitive UI that is perfect for new users. Number two, TD Ameritrade provides cutting-edge tools for all kinds of traders on its highly regarded Think or Swim platform. Number three, E-Trade, dependable for both day trading and long-term investing with strong tools and first-rate customer service. Interactive brokers are excellent for both foreign traders and short sellers. Number four, TradeZero, a more recent broker that provides commission-free trading and top-notch day trading tools. The benefit of education. A strong grasp of the stock market is the biggest advancement we can have. Experience is expensive, education is cheap. We must, therefore, make an investment in our education rather than dependent on a broker. Understanding market trends, become knowledgeable about various investing techniques, and keep up with financial news. We may improve our chances of success in the stock market and make better selections by educating ourselves. In 2024, we will see an increase in the accessibility of trading from home. We may successfully navigate the stock market and make wise investing selections if we choose to begin and have the proper online brokerage and are dedicated to lifelong learning. Accept the resources and tools at our disposal and assume responsibility for our financial destiny. Built on the right side of the cash flow circle, 4 players in the cash flow circle and 2 sides. The left side and the right side, which players are we today and which side are we on today? Where do we want to be tomorrow? On the left side, we have the employee, the self-employed. On the right side, we have the business owner and inside investor. On the left side, people work for earn income, tax at the highest bracket, must sell their time for money. If the person doesn't show up to work doesn't make money, doesn't get paid. That is what it's called earned income, active income, ordinary income. On the right side of the cash flow circle, this is where 3% of the population operates from. And this is where we operate from here inside of our community at Master Investor. This is where we help people build financial freedom and true wealth. Okay, so a business owner owns and controls systems, and inside investor makes money work hard through sound investing. And we want to live and thrive on the right side of the cash flow circle to build true wealth. Start investing. Anyone can start investing in the stock market with the correct mindset and resources. It is easier than we would believe. Research and homework are the greatest ways to determine if investing is the correct decision for us. A minor expenditure might be necessary to fully comprehend the procedure and choose whether or no we love it. To help those who are attempting to figure out which investment class is best for investing. To start with, Master Investor was created. Anyone can begin investing and trading in the stock market from home by following these instructions. Recall that what matters is how regularly we invest in and expand our knowledge. Know how much we start with. Master Investor is offering literature and courses if we think the benefits of investing in stocks outweigh the drawbacks and would like to learn more before we start. Get a copy of our books by clicking in any of them below. Start investing in high quality financial education by reading our financial books, The 10 Rules of Money, How to Build Cash Flow with the Internet, Turn Passive Income On, and How to Invest in Crypto to Build Wealth. I hope that we learn about how to get started with investing in stocks from anywhere. Using our phone, from the comfort of our home, we can start building passive income. So let's turn any capital that we have into passive income. Click the link somewhere on this description, join our inner circle, and start building the assets column with real assets that produce positive cash flow. Two types of debt, good debt and bad debt. Good debt makes us wealthy. It's the type of debt that we use to acquire or build an asset that produces passive income. And bad debt goes with a luxury item maybe, or something that we want that carries an expense, or it's an expense that we most have and is a liability that we have to pay, such as taxes sometimes. But again, with financial education, we can turn taxes into an asset because we can now be on the opposite side of the employee and the self-employed, which will be the business owner and inside investor. So what are we reading today? What are we listening to? What type of ideas are we putting together on a plan, and we're bringing them forward? We have to align our thoughts with the ideal scene that we want to achieve. We have to believe it inside of us that we already achieved what we want, and start working on those little tasks every day that are aligned to build that big dream. Okay, so every day counts, every relationship that we meet counts. And remember about the 3 drivers. We want to be that type of driver that when we leave people's vicinity, and this is the type of investor we want to be, right? Like that driver that when he or she leaves, we're like, that was better than we expected. And we want to be able to be the greatest version at all times, because that's how we capitalize on every single opportunity that the universe gives us. Okay, when we are the right person at the right time, then we can definitely create magic. Turn everything to gold by being the best version, and when we leave people's vicinity, they must think of us as extraordinary individuals, in that their experience with us was way better than they expected. They got value from it, and they cannot wait to see us again. And when we start doing that, we are going places. Anyway, let me know if you have any questions, any feedback. We highly appreciate it. We'll come back and answer any questions, and we'll start a dialogue. Talk to you on the next talk. Stay extraordinary and wealthy, bring you the good and bad news of money, the business principles that work in all economies. How to invest in stocks from home. Start today and enjoy total freedom, because at the end, that's what we're doing. What we're doing is for total freedom. The reward is total freedom. Be able to do what we want, whenever we want, and having control over our time at all times. Anyway, bye for now. Talk to you on the next talk.